Hi, I'm Jessica Amir for the Finance News Network here in Western Sydney and one of Centuria's 45 industrial properties, catching up with the Head of Funds Management for Centuria, Ross Lees. Ross, thanks for having us here at your Arndale Park estate. It's great to see you again.
Thanks very much for coming out here, Jessica.
So today, as I mentioned earlier, to those who are watching at home, we're talking about your Centuria Industrial REIT, ticker code CIP. Just tell us about the strategy of the REIT and just give us an overview.
CIP is Australia's largest domestic pure play industrial REIT. We have a portfolio of 45 assets around the country with a total portfolio value of $1.3 billion. Our objective is to provide investors with income from the properties in the form of distributions and the opportunity for capital growth on their investment.
And moving to your financial year highlights, congratulations, a great set of numbers, including a total shareholder return of 27%. Take us through some of the highlights.
It was a really pleasing year for us. So we delivered earnings per unit to our investors of 18.8 cents, which was in line with the guidance that we provided. We delivered distributions to those investors of 18.4 cents per unit, again in line with guidance that we provided, and overall delivered a total shareholder return to investors of 27%. So we're really pleased with that result. At the same time, we're obviously mindful of our capital management and making sure we continue to improve our balance sheet, and our gearing continue to trend down over the year as well. Subsequent to the end of the financial year, we raised some additional capital to fund some acquisition opportunities, and on a pro forma basis, our gearing is now down to 34.9%, which is the lowest it's been in this vehicle's history. And
congratulations again on the numbers. And operationally, what were the highlights?
For us, the real operational highlights were our high occupancy. We've delivered and maintained occupancy above 95% for the year, and finished the year at 95.8%. And that's really important for us to be able to continue to deliver predictable and ongoing distributions to our investors. During the year as well, for all the tenants that we had expire in our portfolio, by the end of the year, that space was either renewed or released. So it really demonstrates the active management approach of our team to identify what's happening with our customers and how to get ahead of that to make sure the buildings are staying full for as long as possible.
Now to the fund in more detail. Just tell us about the tenant profile. We know who some of your tenants are, but tell us who's leasing your buildings.
A broad range of really high quality national and multinational and ASX listed tenants that lease the buildings. Some of the names that people might know: Visy, Toll, Australia Post, DHL, to name a few. And those tenants, as I said, are all very high quality tenants. The weighted average lease expiry across our portfolio is 4.3 years. So that shows the duration of the contracts we have with these groups.
And so in the financial year, you've considerably grown the portfolio. Just tell us about the acquisitions and key sales.
Sure, so we've continued to grow the fund really to reinforce our position as Australia's largest domestic pure play industrial REIT, and our portfolio has now grown through to $1.3 billion. The acquisitions we've undertaken, there was 8 of them in the year for a total of about $188 million, and most of those were undertaken off market, where we're really quite selective in why we pursued those acquisitions to ensure they were complementary to the portfolio, and we felt they had long-term ongoing relevance to our customer base.
So what's CIP's real clear point of difference in the market in the REIT listed space?
We've made a real point of specialising and differentiating ourselves at the moment, and where we're doing that is specialising by having a portfolio of pure play industrial assets and being quite selective about what's in that portfolio. And where we've differentiated ourselves within that is really focusing on the market that for assets of about 20,000 square metres. So CIP's average asset size is 19,500 square metres. When we analyse leasing markets nationally, we're seeing almost 88% of leasing nationally happening in buildings under 20,000 metres. So there's a very strong weight of capital chasing very large assets in the market at the moment. And what we're finding is that we're able to find better quality acquisitions that are complementary to our existing asset base in this 20,000 square metre space. And we know that we can keep those buildings full for longer, and that's demonstrated by our very high occupancy rates as well. One of the key themes we're seeing in the market is this global trend towards e-commerce as well. And what's happening with the assets is it's creating more demand for smaller assets located closer to population centres. So for tenants that are requiring very rapid delivery to their customers, they need to be located in these smaller facilities that are in infill markets with very good transport and infrastructure connections. And again, they're the types of tenants that we're seeing taking up these facilities at a very high rate.
And just lastly, Ross, before we let you go, what's your outlook for FY20?
Sure, so we think the Australian industrial markets are going to continue to be very well supported, with a very strong weight of capital still looking to get invested in the asset class. We think that's going to maintain very strong pressure on capitalisation rates and upward pressure on values. For the e-commerce market that I mentioned earlier, we think that's going to create tailwinds for demand for our tenants and help elevate rental growth, particularly on the East Coast. And for CIP particularly, we've put our earnings guidance out into the market, and we're expecting to grow our earnings by 2 to 3% next year and increase our distribution to 18.7 cents per unit.
Wonderful. And Ross, congratulations on the results, and thanks very much for having us here at YHI, your Arndell Park estate.
Thank you very much, Jessica. Thanks for coming out.